Hey everyone! Let's talk about something that's been making waves in the financial world. Institutional investment in digital assets. We've seen major players like BlackRock, Vanguard and MicroStrategy adding Bitcoin to their portfolios. What do they know that we don't? Today we're diving deep into the reasons behind this institutional interest in Bitcoin. We're also going to compare Bitcoin to another player in the game TROPTIONS.GOLD. Could this be the dark horse that offers similar benefits to Bitcoin but with potentially less risk? Welcome back to the channel. Let's dive into the strategic reasons why major companies are holding Bitcoin and compare it to TROPTIONS.GOLD. One of the biggest arguments for Bitcoin has always been its potential as a store of value, a digital version of gold. With its limited supply and decentralized nature, Bitcoin shares key characteristics with gold, acting as a hedge against inflation. TROPTIONS.GOLD aims to provide a more stable way to hedge against inflation by its proof-of-use strategy. This could offer a more predictable and less volatile alternative to Bitcoin for institutional investors. Bitcoin's impressive growth trajectory is undeniable, attracting many investors with its potential for high returns. However, this comes with high risk due to its notorious volatility. TROPTIONS.GOLD presents an intriguing alternative with its stability and more predictable growth trajectory, appealing to risk-averse investors. While it may not offer explosive growth, its stability could be much more appealing to institutional investors. Diversification is a fundamental principle of investing. Bitcoin, being a new asset class, has a low correlation with traditional markets. This means it can act as a hedge against losses when the stock market takes a hit. TROPTIONS.GOLD can play a similar role in portfolio diversification, providing stability and diversification. For investors wary of Bitcoin's volatility, TROPTIONS.GOLD could be a valuable addition to their portfolios. When major institutions invest in Bitcoin, it legitimizes the asset class and encourages others to follow suit. TROPTIONS.GOLD, with its focus on stability and regulatory compliance, could appeal to institutions hesitant about Bitcoin. Its structure might make it easier for traditional institutions to embrace, potentially leading to wider adoption and increased legitimacy. One of the biggest hurdles for everyday investors looking to get into Bitcoin is the technical aspect. Bitcoin ETFs allow investors to gain exposure without dealing with complexities. TROPTIONS.GOLD could follow a similar path, creating funds or ETFs that track its price. This would make it easier for both institutional and retail investors to add TROPTIONS.GOLD to their portfolios. Traditionally, companies have held cash reserves in low-yield assets like government bonds. With interest rates at historic lows, corporations are looking for alternative ways to generate higher returns. TROPTIONS.GOLD could present a more palatable option for corporate treasuries, offering stability and potential growth without excessive risk. Regulation is a major challenge and opportunity in the cryptocurrency space. TROPTIONS.GOLD, with its focus on transparency and compliance, could have an easier time navigating the regulatory landscape. This regulatory clarity could be a major advantage for TROPTIONS.GOLD as it seeks to attract institutional investment. Can TROPTIONS.GOLD compete with Bitcoin for institutional investment? It's still early, but the potential is there. TROPTIONS.GOLD offers a compelling alternative for investors looking for stability, regulatory clarity, and predictable growth. As the world embraces digital assets, having options that cater to different risk appetites is crucial. Thanks for watching, and don't forget to like, subscribe, and hit the bell for more insights.